I've got Noureldeen Al Hammoury joining me now in the studio. He is the Chief Global Market Strategist at the Equiti Group, and it's really good to have you here with us today. Thank you very much indeed for joining me.
Thank you for having me.
I really want to step back and try and understand more about what is going on with rates in the US. Obviously, that has a knock-on effect on the dollar, but I think there's more going on than just a rate move as far as the US dollar is concerned, and what's going on with regard gold, silver and oil. So let's start with the Fed. It held the line against the White House effectively. I think we can honestly say that yesterday, keeping rates steady. The statement pointed to a low jobs gains and elevated inflation. They did note it. They noted that the unemployment rate had actually shown signs of stabilisation. What's your view on the Fed and where interest rates are headed in the US?
I mean, it was very obvious that the Federal Reserve will take a pause. This is after basically 3 times of cutting rates since September. At the same time, you still have all the uncertainty regarding tariffs, but at the same time, geopolitical tensions is still ongoing. At the same time, all the policies this administration or the U.S. administration has done still needs more time to basically materialize. A deficit is still high, rates are still high. If you look at the bond yields, also one of the most important things that we're watching is that the bond market is not reacting with how the Federal Reserve basically moved. Usually, when the Federal Reserve basically cut rates by 75 basis points in 3 meetings, you would expect the yield curve to basically kind of just ease back down. But so far, if you look at the 10-year yields today, it's basically 4.25.
Yeah, it's fascinating, isn't it?
It is basically, it's despite what the Federal Reserve trying to do, which I think they succeeded with kind of stabilizing the markets, trying as much as possible to keep things calm. But they still need more data, and data is not there because of what happened in the government shutdown, which basically put a dent on the data sets.
We've seen quite a significant drop in the dollar. What do you put that down to?
The decline of the dollar, first of all, one of the most important things is basically it's more like of a future expectations, not what is basically happening now. It's always that the market will always price in the future in advance. Now, the question would be, what is the worst case scenario? If also, it's not always good for Trump administration right now. He's looking for a weaker dollar, but on the other hand, he's saying, look, we need a strong dollar too. Weaker dollar would maybe reinflate inflation, and this is going to be against what the Federal Reserve wants to do, which basically to cut rates orderly and to keep on holding the prices or price balance. Now, for how long this is going to continue, I don't think so for a long time, because this would basically inflate inflation from one side, and also would complicate the debt issue.
What we are seeing in the gold markets might often be explained away by just a flight to safety at a time of sort of uncertainty and instability. You say it's more than that.
I mean, when you see everything going up, except the dollar, this is a situation that you don't want to see at any given time. But at the same time, I mean, you have a lot of, from one side, you have flight to safety, you have geopolitical tensions. Everybody's talking about a possible confrontation or a strike on Iran. You have also even oil today, despite the fact that a few days ago, the Trump administration announced that there will be a new 300,000 barrels from Venezuela. That did not even cap the prices from going down.
And it's really fascinating because we have seen a push on the oil prices. We've seen them as high as 70, by the way, and that's the first time we've seen them that high since September. And what's so interesting is, I've been following these markets for 35 years now, so I've probably forgotten more than most people know. And what I do, what is very familiar to me is any talk of war or any instability in this region and prices go high. Except that, and we are seeing that today, we haven't seen that actually as a trend over the past couple of years. And we've had a lot of fears about what happens next in this region. Do you see these numbers continuing to push at this point higher?
If the situation continues this way and the Trump's administration policy continues this way, which means, I mean, one of the most important things also everybody's saying that, or the general consensus saying, inflation will pass because it's just one thing and it's going to pass after these tariffs. But can we actually guarantee that there's no more tariffs coming in? It's almost impossible because every single day we wake up on a new announcement by the president.
I want to take advantage of you being here and based here in this region, because oftentimes when I'm at this time of the day on this show, we go sort of to London or to New York. It's fantastic to have you here doing the job that you are doing here in your position, as a global strategist.
Thank you.
With your sort of Gulf-based view, what are you watching as we move through this first quarter and into the second quarter of this year?
The most important thing is definitely geopolitical tensions. We need more of a de-escalation because markets doesn't like uncertainty, whether if it's a local markets or we're talking about global markets. Despite that, so far, we're still seeing that stabilization because maybe the general consensus has a little bit of optimism that this war might not actually happen, or it might be limited and it might pass in very, very quickly. That's from one side. The other side also that this region, over the past, let's say over the past 10 years, it basically proved that it is definitely a hub for the financial markets, and it's actually pouring in again. If you look at Saudi Arabia now, on the 1st of February, they opened their markets to everybody. It's not going to be like just basically for a selective sector. So from that, the safety that we're seeing in the region, that's, I think, it's going to help it even more going forward, even if the war basically
short term, there is some.
It's a short-term bump, but long-term it's still positive.
It's good to have you. Thank you very much.
Thank you for having me.
Indeed, my guest here will be well aware that we sit here in the Gulf at the centre of how we see capital, trade, and energy connecting, and that is it's a fascinating story here. Thank you.
Sure.